They've heard every excuse. They've seen everything, and they're ruthless. They're very dispassionate when it comes to enforcing their rules.
Oh no, they don't care. All they care about is their rules. And I often tell people, and people don't find this interesting, is that the IRS doesn't care about the money. They do not care about the money in the least. It's not theirs. They don't care about it. They care about it.
How do you know whether or not you're in the right tax structure for your business? How do you know that you're not at risk for some kind of IRS audit? Well, in this conversation, I'm talking to a tax expert and an IRS enrolled tax agent who's going to actually break down the specific business laws and knowledge and structure that you need to be in that will take your business to the next level, and so that you can sleep at night. Stay tuned to the end of the video, because at the end of the video, he's actually going to give you the one tip that will save your buns from getting caught by the IRS if you have some kind of issues. Ignorance is not bliss. That's why you should pay attention and watch the Common Sense Show. Today to be interviewing Roger Pearson. This man is a master tax advisor, and he's IRS enrolled. It means that he has a PhD in all things tax and IRS. But today we're talking about how you can take advantage of some taxes as a small business owner. The reality for small business owners is that we get caught in this, am I not doing things right? And we end up having a situation where, we end up getting screwed by the things that we don't know. Ignorance is not bliss when it comes to the IRS.
Well, the IRS and business in general, I think that's true. Most of the problems that come across my desk as far as small business people is they simply have never educated themselves how to run a small business to start with, which is a problem with tax preparers, because it doesn't give us what we need to work with to give them the best outcome they need.
Yeah, no, that's a good point. And what, I'm a big fan of asking questions and trying to ask more questions than I answer when I'm in learning mode, or just generally speaking, because I'm always constantly learning. But for small business owners, they don't really know what questions they should be asking to keep their butts out of the fire. Where should they start with the questions that they should be asking to prevent themselves from going too far down, the ignorance hole?
I mean, when I teach people at the tax desk, especially new people, and even some that have been around a while that just aren't optimizing what they should be, is there's really three pillars that every business stands on. And the first one is legal formats. There are a lot of different legal formats you can do your business under, and organizational aspects. And this is what really most small people don't do well. You have to, I always tell people, you have to have yourself organized to the point where at any given moment of the year, you know what your net profit for the year is. And that is very, very rare for a new person. They haven't chosen a accounting system, or they don't know how to keep track of mileage logs, or all the various things you need to keep track of and document and put into some kind of a format, whether you use a spreadsheet, whether you use QuickBooks or anything else. You know that you have yourself properly documenting things. If you can tell you can tell me what your net profit is this day. And that's the one thing. That's one thing I start. The other thing is you have to know tax structures, because every single legal format has a different tax structure. And depending on the tax structure is going to depend on how much you give the federal government. Most people starting out, of course, start out as a sole proprietorship. And what the thing that puts most people into shock the first time they have to sit down and do a tax return for a sole proprietorship, and they've made some money, is that a minimum 25% of your net profit goes to the federal government. Boom. 15% for Social Security, Medicare, and 10% for taxes, and it goes up from there. If you're in a state that has income taxes also, then you could go, depending how successful your business is, you could be up to 50% just goes out the door to the federal and state. And that is a shock for a lot of people starting out in business for the first time. And that's why it's so important to document all of your expenses and everything else that you're doing, because of that fact. But most people think of that last. most people, they want to get out, they want to start working, they want to, they want to just have their dream of business. I mean, that's a dream. Having your own business in this country is one of the things that makes this country great. There's not a lot of places in the world you can actually do that the way we do it here. And but you have to educate yourself. And going, I've always been amazed that our education system doesn't teach this. I mean, small business is the backbone of this country. The entire economy is the backbone of, not the corporations, the small businesses. And yet our educational system does not teach the basics of small business. Our colleges do not teach the basics of small businesses. For several years, I taught tax classes, and I'd have business majors, university business majors, come into my classes, and they would come up to me and they would tell me, our professors don't teach us any of this stuff.
Right.
They don't teach us taxes or anything else. They say, if we ask questions about, they tell us, well, you have to go learn that someplace else. And yet not doing tax structures and legal structures of businesses is that's fundamental. That's fundamental knowledge that you need to have if you really want to run a business. Or you have to find somebody that's going to help it. Now, I have also a lot of people say, well, I don't need to learn all of that stuff because I'll just hire a CPA or an accountant or a tax professional to do that for me.
Right.
And in response to that, I have to often tell them, well, if you owned a plumbing company and you wanted to hire a plumber for your company and you sat down to interview them, would you have to know something about plumbing to interview them, to find the right one, to know if they knew what they were talking about? And they said, of course. Well, the same thing is true. If you should at some point in your business bring on maybe an accountant or a tax professional onto your team, because you're going to be busy doing other things. The trivial things at some point, you got to bring those people on your team. But you have to know the knowledge yourself. You have to know how it works to self. You sit down and interview. If you get a CPA, I hate these. If you get a CPA that says, drop your stuff off, I'll call you when it's done, run the other way. They don't care about your business. I mean, for me to do the best job I can do for my tax clients, for instance, I sit down and I interview them because I need to know how their business works. If you own a paint company, I need to know how a paint company works, how you do business, to be able to give you the proper advice and do the best job for you. And unfortunately, that hasn't happened a lot. I get so many, I inherit clients. I'll have CPAs and accountants that were doing their business taxes for their clients. They retire, and a lot of times they'll come in to see me. And it's amazing the mistakes that I see because of this attitude, just drop it off and I'll call you when it's done. Instead of sitting down and interviewing your client and finding out how their business works and how I can best use my knowledge to save them money on taxes, or just give them advice on a better way to run their business, and a better way to organize their paperwork and things like that. That's the type of person that you need to find. And
I had an interview with a lawyer on my podcast, and I've been in business for a long time, over 2 decades, and just the questions I was able to ask her specifically on the interview, she could tell that I had a business background and I had dealt with lawyers. I've dealt with many, same thing with accountants. But you're absolutely right, which is I've heard of small business owners who have had a liquidity event. Maybe they sold their business. Maybe there was some other things that happened in their business after taxes. And they call me up and they ask me questions, since I do business coaching and consulting, and they'll say, hey, look, this happened, but this doesn't seem right. And they're like, what do you think? And I'm like, well, I'm not a tax professional, but just hearing what the issue is and instantly recognizing that there might be a problem that they need to hone in on, and to maybe go to someone who's more competent to help them out if the situation is more complex. That is, in my opinion, the order of the day. I think that personally, that small business owners need to be educated across the breadth of what they do in running the business, whether that is marketing, whether that is accounting, tax prep, whether that is basic, business contract law. You should have at least a primer so that you can ask a second or third level question, and make the professional be able to answer it. And if you get a gut feeling, which is your education and wisdom applied over years, which is the gut feeling, in my opinion. If you get a question back from the or an answer back from the professional that you're working with, in this case tax, that doesn't line up with your experience and your knowledge base, it really does give you a sense of being able to contribute in a meaningful way that actually will contribute in the best possible result for your business.
That's absolutely true. Absolutely true. So.
Yeah. So I think that you're absolutely right when you talk about kind of just dropping off your information and then just leaving. I know that when I go to my accountant, it's always like I plan to be there and we talk through things. She asks me a million questions, and this or that. Let me know what you're doing. And then the question isn't always just like a affirmative or negative. It's usually just an explanation about things, a justification that would make sense. And I know what she's doing, and you probably, I'd like to hear what you think about this, which is a justification is almost like you're speaking to the IRS themselves when you're speaking to someone who's actually really good. And
that's true. That's
justifying
true,
what you're saying.
Yeah, that's true, because a good tax preparer, I mean, every time I look at anything, any tax return, it says, all right, could I go into an audit with the IRS and come out smelling like roses? Do I have the documentation to do that? Do I have the backup to do that? Do I have the logic there to do that? And that's what a good person is going to do for you. And you're right. They're not going to do yes and no questions. I mean, there are some of those, but I love to ask, especially with new clients, open-end questions. I always start with open-end questions, and they have to explain things to me. And I learn a lot from that. You learn more from that than you do just asking yes and no questions.
Yeah, I mean, that makes sense. Let me ask you this, because what often comes up with people who are starting businesses is, as you mentioned, legal formations, tax structures. Should I be a sole proprietor for 6 months, then get an LLC? Should I be an LLC that files as an S corp? Should I be a straight S corp, a C corp, whatever? I've heard there's a lot of people who give advice on 30-second TikToks, 90-second reels on Instagram and YouTube. And some of it is good and some of it is okay. When a person is considering what tax structure to actually follow, is anticipation of how much revenue they're going to earn one of the primary features of how they should consider that? Like, in other words, if they project themselves making, for instance, like $250,000 or less, or $500,000 or less, does that kind of link credence to the kind of tax formation or their way of thinking about how they structure the tax for the business?
I believe that when you get to your net profit, if it's $100,000 or less, you need to be looking at your tax structure. Because the thing about it is, a lot of people have a misconception about the term LLC. It stands for Limited Liability Company. It is not a corporation. A lot of people think that's a corporation. It's not. See, before LLCs are things at the state level that the federal government doesn't recognize. IRS doesn't recognize LLCs. Single member LLCs are taxed as sole proprietorships. Multi-member LLCs are taxed as partnerships at the federal level. But and most people, unless there's some states that require, for instance, contractors, building contractors and things to be corporations or S corporations, simply for liability reasons. Now, what an LLC does is, before LLCs happened, if you were a sole proprietorship or you're a general partner in a partnership and somebody sued you, they could attach your personal property. And this is why so many people were having the huge overhead of doing corporations. So over a 10-year period, all 50 states basically passed limited liability company laws. And all that does is it gives you the same type of limited liability that an S corporation has, but for a sole proprietor or a partnership. That's all it does. It doesn't change the tax structure. It doesn't change anything. It just gives you liability protections. That's all it does. So the question really comes into, all right, if I'm a sole proprietor or I'm a general partnership, at what point do I want to start looking at shielding part of my income taxes? And really the only tax structure that you can really do that with well nowadays is the S corporation. Because what happens is that the S corporation it's kind of a hybrid between a corporation and a partnership or sole proprietors. It's a hybrid thing. The taxes are paid at your personal level the same way a sole proprietorship or a partnership is, but it's considered investment income, not earned income, which is two different things.
Mm-hmm.
Earned income, you have to pay 15.3% payroll tax on, which payroll tax includes your Social Security, Medicare. Okay, just like an employer would take it out when you're self-employed. You're the employer, so you're the one that has to take it out and pay it. But you have to pay the employee and the business part of it, which is 15.3%. When you have an S corporation, the money that is not paid out, or your net profit on an S corporation, comes down as investment income. Well, investment income, just like dividends or interest, is not subject to payroll tax. You can save 15%, you know. It's just a couple of years ago, I had a lady come to me. She'd become a home chef, and she was a very successful home chef. She must be really good because she made $100,000 profit the first year, and she was Schedule C, so proprietorship, and she was going to owe $6,000 in taxes. But she came to me early enough in the year that I could use an exception to the tax laws. And that's the thing. For every major tax law, there's an exception. The good taxpayer knows the exceptions, not the law. So I was able to restructure her into an S corporation and saved her. Well, she got a $2,000 return on her personal return, refund, instead of owing $6,000 because we restructured. But you have to understand, to go to S corporations, you have a lot of more overhead. Just like any other corporation, you're expected to do yearly shareholder meetings, even if it's only with yourself, because you're limited to so many shareholders, limited to 100 shareholders, and so on and so on. And you have to W-2 yourself, you know.
Right.
You can't W-2 yourself if you're a partnership or a sole proprietor, but if you're a sole proprietor, partnership, S corporation, you're required to. And the reason being is that if you bring that whole thing down as investment income not subject to payroll tax, the IRS considers that evasion of payroll taxes. Evasion. They can come in and they can actually restructure it and hand you a bill plus penalties and interest for not W-2ing yourself. And they expect you to W-2 yourself between 40 and 60% of your net profit, which is another reason you need to know your net profit, you know. And then you're also required to you're going to have to make estimated taxes on that also. This is why you need somebody in your corner to explain all this to you and help you as you grow your business, make those adjustments year by year. And they can you also, you know, should you do this starting out? I'd say no, because you have the extra cost of doing a corporate tax return. You have the extra cost of doing a payroll and so forth and so on. So there's an extra cost to it. At what point is it worth it? I think if you're making between $70,000 and $100,000 net profit a year, you need to be switching over to an S corporation. You know, it's going to save you thousands of dollars a year. But you have to know the laws and you have to know how to do it properly so that if you walk into an audit, even though they're like 1% is only audited, but still, if you walk into one, then you've got all the documentation. So it's a learning curve. It's a learning curve. And if you have somebody in your corner that can advise you when to do what, that's all right. There's other people that said, well, do I need to go to an S corporation? Says, no, you're not at that point yet in your business where you need to do that. You know, you don't have to go through all this overhead, this extra overhead that you need yet. But it's something that you need to revisit it every single year.
That's excellent advice. You know, there's so many people who generate content out there, and they talk about gross almost all the time. Gross, like they equate your net profit and your gross to the people who are watching, right? So they'll say things like, oh, if you're making $1 million a year, you need to be X. Honestly, I know people who are making millions of dollars a year who are thinking about filing bankruptcy. So it doesn't really mean what people think it means. And I think you're absolutely right. So one of the coaching points I always have in my business coaching with my business coaching clients is knowing your numbers as part of my turnaround process with them, because that is crucial to ultimately being successful at the end of the day. And being a business owner who actually is triumphant is one who understands every aspect of their business, including the numbers. Really, what the numbers do is they tell you a story, and they also tell you how to react to what's going on. And to your point, when you start seeing yourself on the pathway to earning, if you were to have generate monthly profit and loss statements, and you were to see that your profit is going to project out perhaps to that $100,000, instead of waiting to the end of the year, you can decide to make an adjustment with your qualified tax person or accountant to do what you just spoke about. I mean, but it does require you staying on top of what's coming in, what's going out, and knowing the features of your business to a level that actually makes sense. So you often talk about using tax laws to save you money. Are there specific tax, and well, there are a million tax laws, I'm sure, half of which even the IRS doesn't even understand fully. But and so are there specific tax laws that you can think of where a small business owner or SMB can save money that are actually meaningful?
One of the biggest problems I have, especially new businesses, is the mileage deduction. People have heard of it, but they don't really understand it. What the mileage deduction includes is, instead of you having to itemize everything, what your car payments are, how much interest on your car payments, how much interest you're paying on your car loan, how much gas you buy, what your maintenance is, what your insurance is, and all that. You can certainly do that. And there's some aspects that's the required way if you own like a limousine company or something, or have more than 5 in your fleet. You have to do that. But you can also the standard they have the government at one point came up with a standard mileage. Okay, all right. So if you don't want to do all this itemization and all this extra work, the standard deduction includes everything: your car payments, your insurance, your gas, your maintenance, your everything except parking and tolls. And every year they give you, like in 2024, they gave you 67 cents a mile. In 2025, it's 70 cents a mile. And that's very, very generous, because normally, unless you have a real jalopy, you're going to get probably a 40% bigger tax return or tax deduction than you would if you did actual expenses. Right. But there's also a caveat on that, is that they expect you to document the mileage. And you need a mileage log, and the mileage log has the day, the number of miles you drove for business purposes that day, and what the business purpose was, whether it was a client you visited, whether you had to go to Staples to pick up computer paper, whatever the business purpose was for you claiming those miles. And the audits that I've got in for clients, I mean, one of the first things they ask me, where's your mileage log? And if you don't have one, most of the time they will disallow the entire deduction. And for a lot of small businesses, that is one of the top 5 deductions that they have. It's huge. Wow. Deduction, but it requires the proper paperwork on it. And that's something that's not taught to anybody. So they make it easy nowadays. It used to be everything had to be on paper, but nowadays they got all kinds of apps. They have an app. You can just hit start, you can hit stop, and you can type in what the business purpose is, and it'll generate a report at the end of the year that you can take to your tax advisor. And so they make it easy. There's no reason not to do it. But and most of the time, the first year somebody comes in with a small business, they do not have a mileage log. Oh yeah, I drove about this many miles. Well, that doesn't cut it. I'm sorry. You need to take your mileage odometer reading at the first of the year, at the last of the year for your total mileage, and how much of it was business. And you need to document it. That's one of the biggest people can, because when you're averaging things, you're going to miss it. If you
Yeah.
just can think about later, well, I spent this on this and this and this. I says, I don't care about that. Where's my receipts? Show me where you did it. Yeah, I want actual numbers. I don't want, I had one guy come in. He just sat down in front of me and just started pulling numbers out of his head. And I says, I'm sorry, sir. I can't do your taxes. You're
Right.
just making this stuff up,
Yeah.
and you think I can't do your taxes. I'm sorry. I haven't had to turn very many people down, but I've turned some people down because they're not interested in doing things the right way, and I have to be able to, as a good tax professional and as an enrolled agent, I have to be able to justify everything that I put on a tax return.
Right. Yeah. No, I I feel like when I started my business, it was antiquity. I did start before YouTube and Google and all the other stuff. So I had a logbook. I do remember I had to go to Staples, and they had the mileage logbooks, and it had a segment to that paper like start time odometer mileage, end time odometer mileage, and it had that line for a comment right next to when the mileage shifted, and then and then I recorded it every day. I was pretty diligent about doing it. But you're right. Thank God for apps, because those things just kind of like they read your location and where you're going and what you're doing. It does make it a whole lot easier. It's funny because when I sold one of my companies, and when I did, I was asked for paperwork, tons of paperwork, of course, because when you're selling. And it's funny because I had all of my paperwork in folders prepared like for this moment, seemingly, right? And so everything, it didn't take me weeks to get things together. It took me hours to get it together, right? It was really fast. And I think that you bring up a good point, which is, especially with the assistance of modern day tools to track things, the organization of one's business is a crucial aspect of being able to benefit from the laws that exist. And I think that there's like a fallacy, which is that if I am, the more organized I am, and the more I track things, the more I'm going to have to pay because I'm more official now. But if you just get a person who knows what they're doing, like an accountant, a tax preparer, and you're highly organized, you actually stand to benefit even more so than just kind of stringing together some result that won't stand up if you ever get audited.
Absolutely. One of the other big fallacies is that your accountant should be your tax professional. And and that's not necessarily a good thing for your business, because if you have them separate, your accountant gets your P&L, and then you go to your tax professional and talk about the P&L, and you get two different points of view. You get two different points of way looking at your statistics. And sometimes that can be a lot more beneficial than just trusting one person to handle the entire thing. I mean, this person you're entrusting to handle your money. And and so it's not necessarily a good thing to have just one. I mean, if you have somebody that, if you have an accountant that takes yearly tax courses, refresher courses, and everything else. I mean, one of the things I always tell people, if you're choosing an accountant, ask them how many of their CE hours or CPA, how many of their continuing education hours do they take on taxes? Because if you want them to do your taxes, you want them to be up to date also. So there's lots of little things like that you have to look at too.
How much value do you place on having like either an end of the year meeting where you're preparing for the following year, or a beginning of the year meeting where you're preparing for that year that you're actually in?
You should, in October, November timeframe, be looking at where you were and where you want to go, because those are the times you can make changes. If you wait till January, February, it's too late to make those changes. But you may have to make a change to your estimated taxes. You may have to change. So yeah, I think it's important to have that meeting in October, November timeframe to look at where you've been and where you want to go, and make adjustments before the end of the year that could save you some money.
Yeah, it's something that, like, in terms of business planning, that is highly, in my opinion, crucial for business owners. And this assumes a level of engagement with one's business that that it helps you to understand why it's important to pre-plan things like tax structure, especially if you stand to gain from a significant increase in business over the next year because you have contracts coming in that you're expecting some sort of massive grant that's going to help your business grow. It certainly is important to, when planning for all of those things or when they're in process at the end of the year before the new year comes, as you mentioned, to really kind of have this meeting and be responsible. And really the difference between the best business owners I've seen is that they're just proactive about staying ahead of things before they happen. And there's little to no concern. They sleep perfectly fine at night. And they just make really good decisions for themselves.
Absolutely. One of the other things that really I spend a lot of time with clients is on depreciation tables. Most people have no clue what depreciation is, but it's one of the biggest, and that's really what the end of the year thing can help, and looking at things, because the
can you explain it really quickly?
Yeah, depreciation is anytime you buy any kind of equipment over $2,500, you have to put it on what's known as a depreciation table. For instance, if you buy a $3,000 computer system, the government says, okay, you have to deduct that over a 5-year period. Okay, you buy office furniture, you have to deduct that over a 7-year period. You buy property, commercial property, that's 39 years. Residential property is 27.5 years. But like I said, for every law, there is an exception to the law. So when I do somebody's taxes, I sit down and they bought so much. I said, okay, there are like special depreciation and Section 179 that says you can accelerate some of that depreciation. For instance, if I bought a $3,000 computer system, instead of having to wait over 5 years to deduct it, I could use a 179 and say, okay, I want to deduct the entire thing this year if I need it. So I have to sit and know what the bottom line is, what they bought, what's on the depreciation table. I say, okay, if I got a big contract coming up next year, I know I'm going to need more deductions next year. So I should push that depreciation off into a future year when I can need it more than if I do this year. Because if I did it this year, yeah, I'd come up with maybe a negative number. I don't need that. Right. I don't need that. A negativity flowing around. So this is another tactic that you can use in the tax laws, is how to use your depreciation, how much to take this year, how much to push off into the future years when you're going to need it more if you got big contracts or you're growing to the point, you're growing and you got things coming up. And so we can look at things like that. I love depreciation tables because I've saved so many people money doing that, and when choosing when I can deduct equipment that they've got coming into their business.
One of the things that I learned in my time in business so far is that the answers to the test, they're all open book. So the IRS gives you literally all of this stuff like upfront, and you can find it. On their website. Like like you talk about depreciation tables. They give you the rate of depreciation that you can take per year, literally on their website. It's maybe a 5-minute search on their website. You just type in the name of what you're looking for, and then everything related to that it literally just comes up right in front of you.
Right. Yeah. Yeah. All the tables there are on the IRS website. Absolutely.
How has the like TCJA, the Tax Cuts and Jobs Act, that kind of changed the depreciation table and allowed for some accelerated depreciation, which helped me out one year, actually a couple of years ago. And how has that, in your opinion, like helped or hurt small businesses?
I think it gave more latitude in how you can structure your business. A lot of it. I mean, there are a lot of accelerated depreciation on that. Now, for instance, it's going back down. This year, there's only 50% special depreciation instead of 100% like there was when it started. It's decreasing, and I have no idea what's coming up in 2026 with the current political things going on in Washington right now. This is the last year of that act, and so Congress has to rewrite this year what's going to happen in 26 and beyond. And so we won't know till later this year exactly what they're going to do. I mean, there's a lot of speculation that they're going to continue the Jobs Act that was instituted in 2018 instead of going back to the old way of claiming exemptions and all kinds of other stuff that they did. I mean, it really did simplify a lot of things in the Tax Act. So it's going to be interesting to see what they do.
What resources do you, or sources, I should say, do you suggest for small business owners to be able to stay up to date with how things are changing in terms of like tax structure, like additional tax incentives that they can take advantage of? Because oftentimes I know that there's bulletins that, professionals get that are not given to small business owners. But is there some nice primary sources that you recommend?
Well, I get a lot of newsletters from all over the place. The first one I get, of course, the IRS puts one out. You can sign up for newsletters from the IRS, and they will keep you up to date what's going on and what's due when, and so forth and so on. Sometimes that refers to a lot of tax law that most people wouldn't understand. However, it can get technical. I don't know if there's any one that I would recommend. The Kiplinger tax letter is another one that I get. I have a subscription to, and they mainly break things down in more consumer friendly terms to understand. But Kiplinger is very good. They have a lot of different ones, but I get the one that says tax newsletter on it because it specifically deals with the tax structures.
Yeah, that's excellent. And so let's go back to something that you mentioned a little earlier. You're talking about estimated tax payments. And so oftentimes this, I feel like, goes undone by a lot of business owners, frankly, where they get to the end of the year and it's kind of like all or nothing proposition for them. It's like they get to the end of the year and it's just like, okay, waiting on my tax bill, but really they don't have to wait necessarily on their tax bill. They can make a big
no, you
impact.
don't want to wait. You're going to pay a penalty if you do, because the
Yeah.
IRS law states that you have to prepaid at least 90% of what you owe, or you're going to pay a penalty. I think it's like 0.5% on everything above the 90% that you didn't pay. So, when my clients, say, well, how much do I make estimated taxes? Well, number one, if you own a sole proprietorship, you're going to estimate your taxes at a minimum 25% of what your net profit is. That's why it's important to have the net profit. So, the IRS calls these quarterly payments, although as with everything IRS, it makes no sense because the first quarter is 3 months, the second quarter is 2 months, the third quarter is 3 months, and the fourth quarter is 4 months. Does that make sense? No. But there's 4 times a year. They want you to figure what, for instance, the first one is due April 15th, and that's for your net profit of January, February, March. You sit down, you figure your net profit. You need to do an estimated taxes of 25%. Boom. And it's easy to do nowadays. My God, it used to have to write out the check and get the voucher and mail it in and everything. And now it's automated to the point where you just go out to the IRS.gov website and hit make a payment. Personal payment and estimated payment, and you just make it right online there and don't have to worry about any of that. It's instantly credited to your account. So when you do your taxes in the year, of course, you say, okay, I made this much in estimated taxes, which is added to any withholding from W-2s or anything that you got. So that's the proper way to do it. And this is another thing that I generally have to teach first or second year business owners, because nobody told them about that part of it. They go into shock enough when they see they're going to give 25% of the government.
Yeah, it is shocking when you get that tax bill. Like it makes you want to curl up into a ball, shut the lights off in your room, and just stay in there. Like it reminds me of Kevin Garnett when he was on the Celtics and they lost the championship to the Lakers. 1 year, the next year after they won it, he said after that loss in the championship, he sat in the dark room for like 3 days, and that's how I feel every time I make a tax payment. I have to sit in the dark for like 3 days, just contemplating my life. But you don't have to go through that level of depression when you have to write tax checks. You just have to be organized, with yourself. I think that your message about being organized, thinking in advance, having a strategy, and not just kind of winging it or being reactive to what's happening to you I mean, it's a sound message, and it's so practical that anyone can follow it. The biggest issue is that business owners, because they don't plan, they spend the money
Yes.
in advance that's supposed to be going to the IRS.
Yes.
And so you see that it's like, okay, well, I have estimated taxes, or I'm estimating my taxes at $2,000 payment, but free cash flow and IRS payments are two different things. It's like you have to put it away. You have to set it aside and know that it's actually coming to take advantage of it. I mean, this kind of leads into proper business education, right? Just kind of knowing that the ecosystem of business and how it operates and how you as a business owner kind of function in that. What advice do you have in terms of like proper, like structuring knowledge and education? Do you have like primary knowledge that you suggest for business owners? Like, what's the order? Is it like taxes, tax structure? Like, how would you, if this was finances for dummies for small business owners, how would you say, in the order of them learning what they have to do, how would you rank order that?
I think the first thing you have to do is the organizational aspect of a business. How to properly, like I said, you have to properly learn how to know what your net profit is in anything. If you start there, everything else can be changed. Everything else can be addressed, depending on that. But if you don't have that, the rest of it's not going to do any good.
Right.
It simply will. You'll put yourself out of business.
Yeah.
It's like a lot of people. I mean, they wait till the end of the year to see if they made any money or not. And I says, well, that's ridiculous, because if you're doing it at the end of 3 months or 6 months and you see that, hey, I'm not making any profit, what's wrong here? You have a chance to change it around before the rest of the year. And a lot of small business people don't do that. And that's a shame.
Yeah, it's such a good point. And it's like this, it's like everyone thinks that making money, earning money is a horrible thing. Does anybody want to pay taxes? No. But the point is that if you plan for it, paying taxes is not a problem. And then having strategies to deal with the taxes that you may owe, or at the end of the year when you reconcile the year, that's kind of when you figure a portion of it out. But like, I mean, you're right. There are bigger fish to fry other than paying taxes if you're not making any money, which is, how do you plan on staying in business for the next, 5 to 10 years? How do you plan to go past that 5-year failure rate that small businesses have?
Absolutely.
It's like it's almost like I get the sense that people's financial literacy is, I'm trying to avoid the IRS as much as I can, but make as much money as I can at the same time. And the IRS exists to live in the place that wedges itself in between you and that vision, and they have a lot of experience doing this. So, I'm not sure that you can fool. They've heard every excuse. They've seen everything, and they're ruthless. They're very dispassionate when it comes to enforcing their rules.
Oh, no, they don't care. All they care about is their rules. And I often tell people, and people don't find this interesting, is that the IRS doesn't care about the money. They do not care about the money in the least. It's not theirs. They don't care about it. They care about their paperwork. That's all they care about. And if you have your paperwork right with them, you don't have a problem with them. But if you don't, then they will hound you. They don't care about the money, but they do. And most people think that's a strange statement, because they're all about money. No, the employees at the IRS don't care about the money. It's not theirs. They don't care about it. But boy, you get the paperwork wrong, and you can fight with them for 6 months to get it straightened out, because you don't have your paperwork right.
Right. What is one rule that you would suggest for small business owners in order to avoid clashes with the IRS?
It's all in the details. It's all in being able to prove everything that you tell them, but have it backed up, have it documented. As long as you have it documented, you can back it up. You're not going to have a problem with the IRS.
Excellent. I totally believe that. And anytime the IRS has come calling for me, I've been able to answer them very quickly, which they're usually not used to. It's because most people don't deal with them that fast. But I think you're absolutely right. Roger Pearson, thank you for your time. I appreciate it. This has been excellent. I love the pointed comments and thoughts. Obviously, and your experience dealing with small business owners and business owners in general of different sizes. As you mentioned, you've seen it all. You've seen people, kind of paint themselves into a corner. People who were like the height of like, man, this is my perfect customer. Like I want a million of these people, and everything in between. So I appreciate your takes today. It was really helpful. And I think that, having a pragmatic approach, almost like a roadmap and strategy to organizing oneself in business is really the way to go. It's really the only way to go to be successful long-term, is what turns successful small businesses into successful medium and large size businesses. So I appreciate your time today.
Well, thank you. I enjoyed the conversation.
Absolutely. Well, I appreciate you tuning in and listening to this, whether you're watching or listening on audio. Until next time, he's Roger, I'm Micah, and we're out of here. See you later.